Welcome back to Smart Stock Sam, the channel where we cut through the noise and find the trades that actually matter. Today's video is the one you genuinely do not want to skip, because we are going deep on a stock that could be sitting on one of the most explosive asymmetric setups in the entire market right now. We are talking about BMNR, BitMine Immersion Technologies, a complete next week price action forecast, a detailed technical and fundamental breakdown, and exactly how Ethereum's price action is going to make or break everything on the chart. Stay locked in, because by the end of this video, you will know precisely what levels to watch, where the real hidden value is buried, and why some of the most sophisticated institutional money on Wall Street is quietly loading up their positions while the rest of the market is either asleep or actively running away from this name. So let us start at the executive level, the raw intelligence summary that lays out what this company is worth on paper versus what the market is assigning it at current prices. BMNR is trading around $19.45, but when you run the actual math, total current assets divided by shares outstanding, the implied net asset value lands at $23.66 per share. That is a real, calculable discount, not a narrative. And it gets more interesting when you consider historical context. Companies like BMNR, which provide institutional investors with convenient equity market access to crypto exposure, do not typically trade at a discount to NAV. They trade at a premium. The historical peer premium for this category is around 1.6 times NAV. If you apply that multiple to BMNR today, you are not looking at a $19 stock. You are looking at a $37.86 stock. That is the gap the market has not closed yet. So what does the smart money know that has not been priced in? The answer is a yield engine that almost nobody in the retail space is talking about. It is called MAVAN, and we are going to break it down in full detail very shortly. Before we get to MAVAN, let us anchor the conversation in the actual scale of what BitMine is sitting on, because the Treasury numbers here are almost hard to process. The company currently controls over 4.7 million ETH. To put that in perspective, that is 3.92% of the entire circulating supply of Ethereum on planet Earth. Their total Treasury valuation sits at $10.7 billion. This is not a speculative microcap riding a crypto wave. This is a company that has become a macro-scale proxy for Ethereum itself, arguably the most leveraged and capital-efficient way to play the long-term Ethereum thesis inside the equity market. With all the benefits of institutional accessibility, regulatory familiarity, and full balance sheet transparency. And yet, despite that $10 billion chest of digital assets, the stock price is telling a completely different story. That disconnect is the opportunity, and the valuation waterfall makes it undeniable. The current price of $19.45 has been battered by a 27% decline during what has been a painful mini crypto winter. But look at what the numbers are screaming. Implied NAV at $23.66. You are buying below liquidation value. Historical premium target at $37.86. That is the fair price if sentiment simply normalized. Price-to-book ratio at 0.8 compared to a software sector peer average of 15.2. The stock is being priced as if the assets barely exist. Now, I want to ask you something genuinely. How often does a company holding $10 billion in hard assets stay priced at a 20% discount in an efficient market? The answer, historically, is not for very long. Now let us talk about who else has been running these exact same numbers, because the 13F institutional filings are where this story becomes truly jaw-dropping. In the fourth quarter, Bank of America surged their BMNR position by 1,668%. Let that register for a second. Not 16, not 166, 1,668%. BlackRock, the world's largest asset manager, the firm that manages more capital than the GDP of most countries, increased their holdings by 166%, adding over 5.5 million shares in a single quarter. Goldman Sachs has been a consistent buyer. Cathie Wood's ARK Invest has continued building their position, and in the derivatives market, there is heavy whale activity targeting $20 strike calls for January 2027. These are not retail traders punching tickets on a hot tip. These are billion-dollar institutions making structured, high-conviction bets that the valuation gap we just mapped is going to close. And when it closes, it is going to close fast. Now let us get into the mechanics of MAVAN, because this is the piece that fundamentally changes what kind of company BMNR actually is. Most Treasury-focused crypto companies are passive. They buy, they hold, and they wait for the underlying asset to appreciate. BitMine is doing something categorically different. They have taken 3.14 million ETH, valued at over $6 billion, and routed it through the MAVAN processing hub, a validator network where that ETH is actively staked to help secure the Ethereum blockchain. In exchange for securing the network, the company earns staking rewards. The result is an annualized revenue run rate somewhere between $177 million and $300 million. They have converted a static balance sheet into a live cash flow machine. This fundamentally transforms BMNR's investment profile from a speculative bet on Ethereum price appreciation into a yield-generating powerhouse with $10 billion in hard collateral backing it. The market has not fully priced this transition yet, and that lag is the opportunity window we are currently inside. But the MAVAN engine creates a second consequence that makes the eventual move in this stock structurally more violent than most people realize. By routing 66% of their entire ETH treasury into the validator network, BitMine has deliberately made the majority of their holdings illiquid. Only 34% of their Ethereum remains in a liquid position. This is an engineered supply shock. When institutional demand for ETH-linked equity assets surges, and with BlackRock and Bank of America already accumulating at this rate, that demand wave is not exactly a long shot. There will be dramatically less float available to meet it. Supply contracts, demand expands. The price math on that scenario is not subtle. Of course, we have to be completely honest about the single biggest risk sitting on top of this entire thesis, and that is Ethereum itself. BMNR's price action is mechanically linked to ETH defending the $2,000 psychological support zone. Right now, ETH is testing resistance between $2,100 and $2,150. The critical technical level to watch is $2,388. A decisive break above that invalidates the bearish head and shoulders pattern that has been suppressing the chart. If ETH were to lose $2,000 as support, and think carefully about how realistic that scenario is given the institutional flows we just discussed, everything else in this analysis becomes a longer timeline story. But here is the question I keep coming back to. What happens to a company holding nearly 4% of ETH's circulating supply when Ethereum makes its next major leg higher? Does that change your perspective on where BMNR deserves to be priced? Let us get precise on the metrics before we build the trade architecture. RSI is at 51.9, neutral, consolidating, with room to move in either direction and no overbought froth to worry about. The Chaikin money flow is currently below zero, which is a yellow flag. It tells us the recent 12% bounce was most likely short covering, not fresh institutional accumulation. The real buy-in wave has not started yet. Meanwhile, the stock is trading below both its 50-day moving average of $22 and its 200-day moving average of $34. Short-term algorithmic signals are flagging bearish conditions. We have seen intraday prints as low as $18.30. That near-term pressure is real, and any credible analysis has to respect it. But the squeeze setup building underneath all of that technical weakness is where things get genuinely exciting. Short float is over 20 million shares. Dark pool shorting, off-exchange institutional short activity, spiked to 46% on April 1st. Options flow is running 68% calls versus 31% puts, with the heaviest concentration in the $20 and $24 strikes for next month. On the weekly chart, a falling wedge pattern has been quietly constructing itself. One of the most reliable bullish reversal setups in all of technical analysis. A confirmed breakout from that wedge puts a $50 technical target on the table. Now ask yourself honestly, with this much short interest stacked up, this much call positioning loaded in, and this much institutional accumulation all arriving at the same moment, what are the realistic odds that absolutely nothing breaks in BMNR's favor over the coming weeks? That asymmetry is the entire reason this trade exists. Before I share my analysis on next week's trade setup, here is an important disclaimer you absolutely need to hear. Nothing in this video constitutes financial advice or a recommendation to buy or sell any security. Everything here is strictly for educational and informational purposes only. I am not a licensed financial advisor, and all analysis reflects my personal interpretation of publicly available information. Investing in individual equities, especially in the crypto-adjacent space, carries significant risk, including the possibility of losing your entire principal. Markets are inherently unpredictable, conditions change rapidly, and past performance is never a guarantee of future results. Please do your own thorough research and consult a qualified financial professional before making any investment decisions. Never deploy capital you cannot afford to lose. Here is the concrete game plan. Strategic entry zone is between $18.50 and $19.20, aligning directly with recent support and key Fibonacci pivot levels. Hard stop loss at $17.80. A confirmed daily close below $18 tells you the stabilization thesis has failed, and you need to exit cleanly rather than ride it down toward 15. First upside target is $21.22, your official breakout confirmation level. Secondary target is $25 at the historical supply zone. And if the macro picture accelerates with Ethereum reclaiming 2400, analysts at Cantor Fitzgerald carry an overweight rating with a price target range between $33 and $39. A potential 100% return from current levels just to reach what institutional research calls fair value. Here is the bottom line on BMNR. You have a company holding $10.7 billion in Ethereum assets, trading at 80 cents on the dollar. You have the world's largest asset managers quietly loading their positions while retail sellers hand over shares at a discount. You have a yield engine generating 9-figure annual revenue that the market has barely started to price in. You have a deliberate structural supply squeeze baked into the company's architecture by design. You have a falling wedge on the weekly chart that technical traders are watching very carefully. And you have institutional price targets sitting at double the current share price. The fundamentals are building the floor. The whales are coiling the spring. Now, we simply wait for the market to catch up. So here's my question for you, and I genuinely want your answer in the comments below. Do you think BMNR breaks above $21 before Ethereum reclaims 2400, or does ETH need to lead the charge first for this entire thesis to unlock? Drop your take down there. The discussion always gets sharper when the Smart Stock Sam community weighs in. If this breakdown added real value to your research process, please share it with someone who needs to see it. Hit the like button so the algorithm gets out of the way and more investors can find this analysis. And if you are not yet part of the Smart Stock Sam family, right now is a great time to subscribe, because detailed, data-driven breakdowns exactly like this one are what we deliver every single week. See you in the next one.